Chris Pierce has some opinions. He's senior research analyst with Needham, and today he reiterated his buy rating on Rivian and his hold on Tesla. Chris, why the hold on Tesla and the buy on Rivian? What's the distinction between the two?
I look at Rivian and I see a stock that investors kind of bailed on throughout 2022 because of supply chain issues, and they had to constantly revise production numbers lower. With Rivian, in my eyes, it's never been a demand question. It's about, can they manufacture these vehicles and get them out to consumers at an increasing pace? And they proved they could do that in Q1, beating consensus estimates for deliveries. Investors didn't really take notice. It's taken some time for investors to kind of to look at the stock with fresh eyes. But after a healthy beat in Q2, I think investors are starting to realize that this is a company that we feel comfortable about demand. Manufacturing is improving at accelerating rates, and they've detailed per unit cost downs on a per unit basis. So margins can improve from fixed cost absorption, and margins can improve on a per unit basis. So you've got a stock with momentum behind it, a company with momentum behind it as far as manufacturing, and the numbers are heading in the right direction.
Did I hear you say that
left for dead? That
investors had taken Rivian to the woodshed last year. If I did hear you correctly, can't the same be said for Tesla over the past 12? I mean, it's come back a lot this year, to make the fair point, but last year was a very bad year for Tesla in the stock market.
I would say with Rivian, you had an IPO that IPO'd around, I think $78 was the price. The stock trended lower throughout the year on supply chain issues and manufacturing issues. And, investors were just unwilling you had a stock that people were questioning the future of this company 3 to 5 years from now, given capital that need to be raised, investor appetite for growth stocks to lose money. And I think that longer-term estimates, my longer-term estimates at least, I feel a lot more comfortable about after the past 2 quarters in a stock, like you said, that had been, quote unquote, taken to the woodshed. So you've got an under-owned asset, an underappreciated asset here, where investors kind of have to do a 180 as a negative feedback loop turns to a positive feedback loop.
Mm-hmm. All right,
as far as Tesla,
go ahead.
Go ahead. I would say as far as Tesla, yes, there was a drawdown towards the end of last year, but it was more around I don't know that it was ever around the company fundamentals. It was around what's going on with Tesla's share price. Is their CEO selling to fund Tesla, to fund Twitter? It wasn't really around the fundamentals. And as Tesla's fundamentals have improved, I think that the stock has rallied, but it's a situation where if you look at these two stocks, you've got one that's very, I don't want to say over-owned, but one owned from a healthy perspective, from a retail investment standpoint, that drives a very high multiple where expectations are very high. You've got a stock in Rivian where expectations have gotten very low over time, and now that those are just starting to increase, I think that's the time you want to buy a stock that's underperformed that can turn into an outperformer.
So you have a hold on Tesla, as we said. I'm just curious, what role does competition for Tesla play in your skepticism?
Minimal. I think Tesla has a great future. From an institutional investor perspective, I look at the stock trading at 45 times my 25 numbers when I'm, factoring in 20-ish% EPS growth. I am willing to, put somewhat of a retail investor hat on and stretch the multiple because that's the type of investor base that's here. But 45 times for a 20% EPS growth, it just doesn't seem as great a fit for me at this point in time versus Rivian.
What little I know about investing tells me that when you've got a PE that is more than double the growth rate, that is a very expensive stock. You ideally, don't you want a PE that is either in line with or even below the growth rate of the stock, right, Chris?
That's Tesla's never traded at a cheap PE to growth, what they call a PEG ratio. But that's to me, you're pitching the case for Rivian back to me. You've got a stock where investor expectations are low, things are turning around, and investors aren't on the train yet, versus Tesla, you've got a stock that the train is quite crowded. It's already left the station, and it's trading at a very expensive multiple, and expectations are high for Cybertruck. Expectations are high around this charging standard in the United States. So the bar is just higher to own the stock, in my eyes.